Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, October the 7th, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. We're getting that bounce we said might occur if we didn't retrace back below that 618 to make a new low. We were likely going to go rally up towards our target, toward the Magic Fibo. So let's jump in, but high level overview. Wave 1 is done. We're working on wave 2 down. Is wave 2 over? I don't think so. Is it going to get all the way down here? That's still the plan until price proves otherwise. But as we were talking last week, let's jump into the charting platform, and we can see that we said since we reversed up here and we came down, we needed to take out 97 area. If we were to close below that, then we would go with our swing point lows in the 95, 90, 95, 60 area, which ties in the previous ones in the 95, 80, 95, 30 area. And we didn't. So we said there was a chance this could bounce and continue higher. And we're likely going to go up into this area and test the Magic Fibo if we can close above this little pink box. So from the recent high to low, here's my 618, that 98.17 up to 98.26. We're above both of those right now, but yesterday we spiked up and closed below. So can we close above today? If the answer is yes, then we have targets we're likely going to that 98.70, 98.91, and potentially pushing towards that 99.12, basically making a run towards our Magic Fibo that is sloping downward. So this could just grunt and grind and chop in this zone for days into next week or longer. And we'll probably get this to grind somewhere into this area, just like we did the last time. And then we're looking for a reversal back down. So Mr. Toussaint, what do we need here? Likely this is going to grind up into the zone. That was the initial A equals C would put us up here a little bit higher. And if it's A times 1.272 equals C, then we need to come up toward that 99 target. So this is probably where we're headed, but if we close above this today, highest probability, that's exactly where we're headed. So I would not be surprised to see us try to rally into this pink box as the Magic Fibo is sloping downward. Maybe we run into each other in the same area, then push lower. So what's going to be the key level? From that low, I'm going to move this out of the way for a second. From this recent low up to the high, if we travel a little further and like go up toward that Magic Fibo, up toward this zone up here, and then we push lower, well, you can see from this low to that high, my 618 is going to be around that 97.40 area. So if we were to see price do what it did last time, got a beautiful three-wave correction, ABC. We proceeded to push lower We did finally break below that 618 level, and which meant we were going to make a new swing point low. What happened? We chopped and grinded for a while, but we did make a new low. So are we going to make yet another new low, or is this thing in the beginning of a breakout? Well, as long as this rally stops in this pink box, stays below the Magic Fibo, turns down, and again, if it's this low, and let's just say it's up high around that 99.30 area, just as an example, that if we do turn down, and then we cross back below and close below this 97, then it sets the tone. We're going to make yet another new swing point low. And if that is the case, what are the targets? 95.81, 95.40, 95.80, 95.30, 9 area, 95.40. So you can see how they overlap. So in the prior one, we never did reach the target. This rally to yet another lower high, we started breaking back below that 97 area, then it sets the tone. We're coming down here anyway. Part of this chopping, grinding, laboring decline. This is not out of the question. It's just part of price action. So in closing, I do think the dollar is going to strengthen a little bit more and go into this box. We haven't closed above yesterday. We're trying again today. So keep an eye on that. If this daily candle body closes above this pink box, then expect it to go up about another half a point to point or so in that area. What are we looking for? Stay below the Magic Fibo. So this would be a resounding rejection. If we run in the Magic Fibo, then we get rejected and we close back below 97 right there, which would be from the low to the high, that's 618 right there. And then it would set the tone. We're making a new swing point low. That is the plan until price proves otherwise. Amen? So as long as we stay below the Magic Fibo, no reason to believe the dollar is ready to even attempt to go breaking out. All righty. Why is that important? Because when you know where the dollar's going, you know where a lot of asset classes are going, like gold and silver and black gold Texas tea, and a lot of areas, including but not limited to, of course, our euro dollar, pound dollar. So I even warned you about this last week when the dollar started to dip again and the euro started to bounce, that this might be a retracement to yet another push lower. If the dollar was going to rally up into that Magic Fibo area, then the euro dollar was going to decline into the supporting zone / Magic Fibo area. So far, so good. So if the dollar continues to push higher, this absolutely continues to push lower. Inverse relationship. It's a beautiful thing. Why is that the case? Well, the dollar index is made up of a basket of currencies. The most predominant currency in that basket happens to be the euro dollar, which is the most commonly traded Forex pair. So, dollar goes to the Magic Fibo, euro dollar declines toward the Magic Fibo in this support zone. Pound dollar, same thing. It bounced. We got into a position of authority. And do we get pipped out? Probably. If the dollar is going to continue to push higher, this pound dollar should continue to push lower. Kind of the plan. Then what? When the dollar reverses and start heading much lower, the euro dollar and the pound dollar are going to head much higher. So we still have an outstanding target on this one up here at 38.80, 39.60. And we've been chopping and grinding. And even as we might pull back yet again, if the dollar pops, we're still looking to achieve these targets. We came awfully close, went to 37.90 of that 38.80. But I'm continuing with my long term, expecting the pound to go higher before we get the Elizabeth, I'm coming to join you, honey. And then the pound and the euro go way lower as the dollar goes on to break new highs. That's what this target tells us when we look at this bigger picture. It is a wave two correction. Once it's over and we go breaking new highs, then that euro dollar is going to break new lows and the pound dollar is going to break new lows. And we talked about this over 3 years ago when we talked about this reversal. We said the euro dollar would go up thousands of pips. We said the pound dollar would go up thousands of pips. So far, so good. Exactly what it's done. But is this over and we're ready to go breaking out so that the euro goes reversing? Well, this is what that picture looks like on a larger scale. And what are we looking for? We're looking for an A to go up in a B. And once it's done, we come back down in C. So that's kind of like the dollar. We got a correction and we're expected to break new highs. Well, this is the correction and we're expected to break new lows when the dollar breaks new highs. Inverse relationship. So how much higher are we going to go? Is this the end and we're ready to do it now? Or are we going to keep going? Well, like I said, till price proves otherwise, we believe it's going to go higher as the dollar is still projected to go lower. But that's part of price action, and we look for when is it likely to do it. 3 years ago, when we told you down here at 0.95, this is a beautiful opportunity to make thousands of pips. And we went from 0.95 up to 120. That's not too shabby, 119. That's a lot of pips. Is it over? I'm not willing to call that yet. We have no reason to believe we won't go higher based on the correction we're currently under for the big picture. So price proves otherwise. Amen? All righty. So that's why we spend so much time on this, saying at some point, the bottom line is wave two will end, whether it's down here, here, or anywhere in between. It's supposed to end, and the dollar's supposed to go breaking new highs. So is this it? And we're ready to do that? I don't think so. Just like last time when we talked about that, we said we're likely going to make another low. We did it. Well, same rule here. We're likely to make a lower high, lower low until price proves otherwise. When do we take this seriously from a high level overview? Well, look at that down move. You'd go from the high, you go to the low, and you look for a 618 retracement, 786 retracement zone. And if we go breaking above it, then it kind of sets the tone. We're looking to make new highs, and we're nowhere near that level. So in closing on the dollar index, just to finish that conversation, I do believe we're going to go higher. I do believe the euro dollar is going to pull back a little bit more, and the pound dollar is going to pull back a little bit more as the dollar index goes a little higher. But just like last time, we're expecting a reversal. So how do I know it's on track? We go up in this zone, we reverse, we come back out from the low to whatever that high is. You find your 618 retracement. You start closing below it. Not a wick, but a candle body. And a candle body closes below it, then it's game on. 75%, we're going to go visit the 1448. And 70+%, we're going to go visit the 1272. And both of these from this prior low to high, that's still the target. And from the most recent lower low to projected lower high in the same area, right? So confluence of events, no reason to believe in the coming weeks this isn't going to grind up here, get rejected, and start pushing back down. That is the plan. Fair enough? All right. What about the dollar yen? Dollar yen is popping because the dollar is popping. So how much higher does this go? Well, this thing could take off and go thousands of pips if that dollar is done and we're ready for the dollar index to go breaking new highs. This thing is going to follow suit with it. Just like it did over here when the dollar was strengthening, we got the big push, and since then we got a big correction. So we're going to continue to make some lows. Well, if the dollar continues to break down, We believe this is going to end up with a lower high and another push. But if the dollar is finished and it's ready to go breaking new highs above that 114.72, it's going to pull this dollar yen with it. Fair enough. What about the pound dollar? It's testing this upper level. Randy, we were looking for this. If we're going to close above 202, there's a chance we could make a nice little run. But we haven't done it yet. We're still testing that all important zone. So I'm watching this very closely, see how we close today. And we could have potential of a little push higher. But I'd still be very careful as the big conversation. All of this overlapping chopping after that move down still states that there's a chance we're still going to get this much bigger move down. Pay me now, pay me later. Eventually, I'm still looking for this to happen, even if we do go higher. This could turn into an expanded flat correction where we actually go on to make a new high before we then come back down near these lows. So I would definitely be in these type of situations in a position of authority so that if this thing does get rejected and start coming down, if you're long, that is, then you'll be pipped out for more profit. But I would not just start loading here going, well, it's a done deal. It's breaking out. It's intraday candle. And right now it looks good, but is it truly going up here? Force price to prove itself. Then I would start to target 207, potentially 211. And as he breaking out and getting into a position, I would be in a position of authority because if it gets spanked and this ends up with the high, the low, the lower high, lower low, you're just get stopped out for more profit. Then you can look to establish a short position. Amen. Well, this was no surprise that this was bouncing a little bit. Our daily was oversold, started to reverse. So the software was kind of giving us that idea that we could possibly see a nice little bounce. And of course, the markets are bouncing. That kind of helps. When the markets go kaput and we get these big market corrections, like we've seen in the past, let me give you a bigger view of the weekly and bring this down. I think I compressed this enough for you. But we've discussed that many times. Back in the dot-com bubble burst, what happened when the markets crashed? Pound yen went down about 9,000 pips. Then during the 2007 financial crisis, what happened? Went down about 13,000 pips. So be careful. Do I think the pound is ready to go break all-time highs and go to the roof, through the moon? Not necessarily. Could we go a little bit higher? Maybe. But when we get the next financial crisis, which is looming, we got cracks in the foundation. There are cracks showing up all over in the foundation, 37 trillion in debt. We still have a lot of issues we have to deal with, and commercial real estate, for example. And you see a lot of this surfacing. Credit card debts at all-time highs. All these things are happening, just like we did over here with the real estate bubble. Is it the commercial real estate? Is it a failed fiat currency? What's going to be the catalyst? All I'm going to do is call it the Elizabeth, I'm coming to join you, honey. And when that happens, we're going to expect this pound yen to have another rinse and repeat type of financial crisis. It's going to strengthen. Typically, the yen will strengthen during those events, and these will go way down. So be careful. I did call this, but now that we see this kind of topping action so far, could we go higher? Yes. But do we go breaking all-time highs and continue and never look back? No. Another financial crisis is looming, and every time we've had one, we've seen this thing sell off dramatically. Amen? So that kind of ties into the bigger picture that I'm looking for. Elizabeth, I'm coming to join you, honey, sooner than later. Probably start to manifest sometime in 2026, maybe 27, but it's out there, and this is looming as well. And so far on price action, That still hasn't given us the free zone to say that we're not going to do it, because price action, again, this looked very impulsive, a lot of overlapping. And yes, it's popping a little bit more. It's just begging you to load the boat and go long, so that when it does do the next leg down, it'll catch a lot of people off guard. And it could happen any day to any month to next year. Do I know exactly when? No, nobody does. But this technical picture is telling you, if you're long on a breakout, be sure you're in a position of authority, so that if it reverses very quickly, it'll stop you out for more profit. And then you can look potentially setting up a shorting position. I was able to get a little shorting position in the last week, and then we got pipped out to the upside. So if you're long, do the same thing. And if you get pulled back down, because again, we're still in that danger zone of this to go reversing. It's possible we could go breaking out, but we shall see. But again, even in any type of long position, even if I establish a long position, said, okay, we broke that, high probability we're going to make a move toward 210, 211, then I'm in a position of authority, because if we don't make it and we get plummeted down, I can then get more profit out of it and then look to short it, because this bigger picture will play out sooner than later, but no later than later. Because again, a financial crisis is looming. Does it happen today, tomorrow, next week? Probably not. By the end of the year, better chance. Into 2026, even a better chance. And history has told us, every time we get any type of financial crisis, even when there's a hiccup, what was that big down move? That was the carry trade unwinding. Interesting. So that wasn't even a financial crisis, but we saw what happened. It went dramatically lower from 207 all the way to 180. Big move. So that's the inevitable move we expect to happen. All right, let's continue. What about the markets? ES, man, it's going to the moon. It's reaching our extensions. Rinse and repeat. Punch junk euphoria is continuing. We went on to reach our two targets from last week, 67.76, 67.90, actually spiked up to 6,800. What's the next target? 68.38, kind of overlapping between the prior low to high extension and the recent high to low extension. So this is confluence of events. Do I think we're going to grind up there? Yes. Could we get a little bit of a dip before the next rip? Typically, when you reach your 1448, 1272, three things happen. Either it just continues to rip toward the 1618, which is a lower probability, or you get some sort of retest where you come down, test the breakout, which we kind of reached in there. We tested the breakout, we touched it, tested the breakout again, and now we're bouncing. So the second one of the two has already played out. Here was the prior breakout. We closed above the 618. We went to the 1448, 1272. We touched it the other day, came back to retest. Now we're bouncing again. So this is typically a sign you're going to start drifting toward the 1618. After you reach the 1272, 1448, you get your pullback to test the previous high, and then it bounces to go where? Up here at 68.38. So that is the open target at the moment for us to grind towards. Amen? All righty. So does this mean it has to reach that today? It could, but no. It could take days. It could chop around. Government shutdown is typically what we've seen. The markets tend to rally when the government shut down. Well, we'll see how that plays out, but right now it's drifting higher and we're continuing to grind. So after that little reach the target, pull back and retest the low where we broke out from right there, this looks more bullish to continue toward that 68.38 target. Fair enough? All right, what about the NASDAQ? NASDAQ as well is looking more bullish. And you say, well, man, there's a ton of lines on this chart. That's because we do these dips and rips and continuations all the time. The most recent correction from that low to that high, we already reached the 1448 to 1272. What's the next target up here? 25.4. So do I think we're going to reach that? Yes, I do. We went up, reached the targets, came back and retested the prior breakout, similar to ES. Here was the prior breakout. We took out from the recent high to low that 618 level. You remember we talked about this. When we start breaking that, we could start targeting 25.1, 25.193, then 25.4. And then what happened? We reached the 1448, we reached the 1272. After reaching that, we pulled back to retest where we broke out from. Notice where the candle body's not wicks closed. And then we bounced. So this is screaming we're going to continue to grind toward that 25,400. What are the targets in between? That's why I love these extensions. 25, 267, we touched it, kind of pulled back off of it. Next one's up here at 25, 294, 25, 360, 368, then 25.4. Where do I think we're heading in the coming days? With a stair-stepping affair? Right there, 25.4. That is the plan. So any dips should be bought as we march on to the next big target of 25.4. Fair enough. What about the Russell? Even the Russell, it's a little bit different than the others. It's struggled a lot more, but from its recent high to low, which comes back in November of last year, and we had the big pullback, it's screaming we're going to go test 2600, 2590, 2690, basically 2600, 2700. I still think we're going to grind up that way. The rule is the rule. From the high to the low, we finally took out the 618786 zone, this big pink box. And sure enough, we've been grinding right toward the target. So I don't think this is over. I still think there's more upside as we move into the Santa Claus rally, end of the year push. We should likely see Russell go toward 2600, maybe 2700. We shall see. Most people trade that by IWM. Same rule. Up here at 256 is the target for IWM, followed by 265. Do I think we're going to get there based on the high to the low, taking out that all-important resistance zone of my 618786? Yeah, we got a 75% chance we're going to go visit 256. We got a 70+% chance we're going to go visit 265. So any dips should be bought on the IWM, right? Could we get a little bit of a correction? Well, this thing has been on a tear, and we're likely going to get, even if we retest, which we're coming retest the breakout as we speak, is this going to do what the NASDAQ and the ES have just done? It broke out, went up and touched the 1272, 1448, 1272, retest the breakout before continuing. That's kind of the plan, because that bigger picture says we should go up here to 256 and maybe as high as 265. And this is just part of that stair step ping pong between the Fibo levels as we work on those upside targets. So again, I do think there's an opportunity for a buy the dip scenario. As we rallied into it, we're pulling back just a little bit, but that's the plan for this thing to grind higher as we move in toward the end of the year. All right, and again, those targets on IWM, 256 followed by 265. What about the Dow? Even the Dow has made it into our big resistance zone. We talked about this a long time ago. ES was going to go to 6,600 or above. We're there. NASDAQ was going to go to 25,000 to 26,000 range. We're there. Russell wasn't expected to go breaking the new highs. I thought it would slow down in this area, but since its price has proven it, now you got the upside targets. And the Dow was expected to go up into the same zone, and we're there as well. Is this over? I don't think so. I think the Dow's going to get that blow off top as we move toward the end of the year. I think ES is going to continue to get a bigger of a blow off top as we go into the end of the year. And NASDAQ is going to push higher into that zone as that blow off top in the end of the year. And what about the Nikkei? Well, Japan just elected their first female prime minister, and she's very conservative. So this thing took a pop right into our target zone. Went right where we expected this. I kept talking about that 48,000, maybe up towards 52,000. And we went right to that 48,000 and change. And we're getting a little bit of a pullback. After these big runs, you typically get a little stair step. And that's just typical price action. In the strongest of downtrends, price doesn't go straight down, it stair steps lower. In the strongest of uptrends, it doesn't go straight up, it stair steps higher. We call that the cycling time frames that force this price action, but that's the ebb and flow of the market. It never moves in one direction. And after that big pop, I would not be surprised to see at some point, even though I do think we're going to go higher, we might come back in here, gap fill that gap, then go on to push higher. And right now, after we reach the 48 target, we got a target extension up here at 52, maybe as high as 57. But the recent price action off of that last pop, you can take that swing point high to swing point low, and you can see up here, next target, 48,868, followed by 49.7. So this is right into the wheelhouse, what we talked about for the Nikkei. And why do we look at the Nikkei? Because it's global liquidity. I use it as a barometer for global liquidity. I don't trade the Nikkei. You could, but I don't. I just use it when I talked about this. And I said, when we see the Nikkei start pushing into 46, 48, 50,000, then ES is going to be up above 6,600. Is it not there? Yes. NASDAQ was going to be in that 24 to 26,000 range. It's at 25. So, I mean, just like we had anticipated months and months back, if the Nikkei was going to break out and make a run toward that 48 to 50,000, then our markets would follow suit. And that's exactly what they have done. So far, so good. So where do we think we're going? Be sure you're quick to take profits, because the higher the nosebleed we get to, the higher in the stratosphere, at some point we're going to get that big correction. Is it going to be end of year? That's kind of the plan. Get the big Santa Claus rally into the end of the year, and then maybe it's, like I said, a fiat currency that fails, the commercial real estate bubble bursts, many different ways that this can happen, but whatever they call it, I'm calling it the Fred G. Sanford, Elizabeth, I'm coming to join you, honey. And it is looming, and the cracks in the foundation are appearing. It's just a matter of time. But that's how we trade this day in and day out. If you're a Forex trader, we've given you great insight. You're a stock trader, we've given you some great trades in stocks. As far as options, same thing. How about our Newmont pick? Remember that? We talked about this back in last year, and we did this crazy, out of the money call option that was very cheap, and it ran where we bought at 30 bucks, we bought 60 call options, and we said there was a very good chance it was going to get to 60, if not push even higher. And this thing doesn't expire until next year. And I'm up massively. So I took profits on the pullback. I added to position, took massive profits. So these type of plays have been bountiful. And as long as gold continues, can Newmont continue higher? Yeah. But we do need a big pullback. I still think gold, believe it or not, at some point, you're not going to go vertical and stay vertical. No matter what you're looking at, it goes vertical for a while and you get big pullback. It goes vertical, you get a pullback. Go back in history. It's the psychology of a market cycle. You get that bubble pattern, and you get the correction. So even the last one, this thing went on a tear from out 30 towards 60, got a beautiful correction on that. And I rinse and repeat. I think my dollar call option went up to like 850, unheard of, right? And then we got this correction, and it held the 618786 zone, and I started another one. Look at this thing, it's out of control. So be careful. We're due for another big correction, and we haven't had it in a while. So we'll go over gold in a minute, but that's kind of the plan. And as gold continues to rip toward 5,000, this should continue higher as well as the profit margin gets higher and higher for these gold companies. But we do need the correction. So this will be a play I'm looking for. After that run, pullback, this run, I'm looking for another one. Maybe this is the beginning of the 1, 2, 3, pull back in 4, and then we could take the last push for wave 5 that continues this run up into the hundreds plus. But at some point we get the pullback. So set an alert on Newmont. We get Newmont and gold gets that big pullback we're looking for. Newmont will take a hit. And when it does, we can look at maybe doing another call option out to 2028. Oh, we'll see what it looks like and see where we can get in for this. Like a dollar call option to go over $8. Not too shabby. And then again, this was beautiful play. So do we get it again? Yeah, I do think so. This looks like a beautiful 1, 2, 3. Remember how we do the rules on the 1, 2, 3 instead of an ABC? Remove this. I'm just going to do this real quick for you. But this definitely looks more like a 1, 2, 3 as opposed to an ABC type of correction, because A, it's breaking out, and B, the length of that third wave is reaching what we would expect those parameters to be. So from this recent low up to the high, up to the higher low, and let me go ahead and remove a lot of these because I have too many on here real quick. Take all this off so nothing is in the way. When you do that move, remember what we discussed, like we did on the dollar index a while back, from that recent low to the high, to this higher low. Where did we hold? The support zone, 618786 zone. And where did we go to? We not only did A equals C, Randy, see it? We went beyond the 1272 and we went above the 1618. So that doesn't tell me that this run is over and it's going to go crumbling yet. But at some point, based on this structure, that perfect pullback looks like a 1 and a 2 more than an ABC. Because why? This leg extended past the 1618. That is screaming a wave 3. It doesn't tell me that this is the top right now. We're definitely going to come down. But here's your correction line. Back where we made this swing point high up in that $60 range, that's where this, when we do start to pull back, should not go into that area. So remember, any type of pullback, we see we go from the 80s. What if we go up to 100 and we start to pull back? This level will not change. That's the 1, 2. So in a 3, impulsive move up, wave 5, 1, 2, 3, 4, 5, your wave 3 top into a 4 correction should not go into the area of wave 1. So I would keep an eye on that swing point high, which was 57, 58, 58.72, looks like the high. So place a line at that 58.72, which would be that high there. We're going to place a line there. And at some point, when we get our wave 4 correction, which gold is going to give us 1, 2, as gold goes down, Newmont's going to correct. And where should it not go? It should not go into the area below, say, $57. It can come down as much as this reversal. It can touch that and go higher. That's fine. It just can't go and overlap and go below that. So we may have any type of move, James, Ian, Randy, any type of correction we get, and we're above that 50, what did we say that was? 58, 58.72. As long as we stay above $58, that's looking good for the next extension to go higher. And are we going to get it now? That doesn't tell me that wave 3 is over yet. It means that 1, 2, this is definitely a wave 3 based on the criteria, and price action is screaming it's a wave 3. So again, what happens after wave 3? You get some sort of correction in a 4, then you go pop it in wave 5. In commodities, wave 5s typically are sometimes the longest. On typical wave counts, wave 3 is not always the longest. It just can't be the shortest. And already wave 3 is much longer than wave 1. So that leaves us with wave 5 could be equal to wave 1, or wave 5 could be longer than wave 3. And that could put us well into the hundreds. Fair enough? So what's the way to look at that? If it's an equality type of move, you can do from the low up to the high. That's basically the wave 1 move. And once we get a wave 4 correction, where do we go? Do we come back down to about $60, $60, $70? That would put us about 102, right? If wave 1 is wave 5 is going to equal wave 1, whatever the correction is, you attach that and say that's what the equal move would be for wave 1. Well, what if it's going to be more like wave 3? Well, what if it does something like that? And again, it may not even be over yet, but then we do the same type of move as this wave 3 and duplicate that in a wave 5 and say we come back down into, say, $65 range maybe. Again, we can't cross below this 58, so maybe we come into the, say, $70 range, and we come to $70 during that correction, and then our wave 5 just matches wave 3. It'd be 125. And typically, in commodities, your wave 5 can be the longest, longer than wave 3. That would put us up maybe around 138, 140 something. I like it. Amen. Knowing that gold's going to go higher. This is the reason I like this trade way back here in 2024 when we discussed buying a $30 call, $60 call option when price was at $30 and it went to 60. And then we took profits and it's doing it again. So if you're still in that trade, I would be taking some profits because we're definitely getting closer to expiration on that. And we got that correction coming down sooner than later. So I'm looking to do another one of these. 1, 2. Now this last correction, I'm looking for another pullback to stay above this wave 1 high. So just put the labeling back on there. There's the wave 1. Here's the wave 2. From that low to high was that 618786 retracement, which is typically signs of a wave 2 correction. Wave 3s typically go at least toward the 1618, as opposed to an A, B. Your C wave stops at somewhere around the equality up to a 1272, but never do you see it cross the 1618. Got it? So this is screaming, Emil, 1, 2, 3. What happens after we get a pullback in 4? As long as it stays above our green line, then we get our wave 5 push, and that could be a double. Maybe at this point we got a 60s and we look to buy a 100 call option way out of the money again, so they're much more less expensive. That's why I was able to get in $1 down here, went to $8. Well, maybe we get in at $5 and it goes to $20, $30. Who knows? We shall see. That is the plan. All right. What about Tesla? Tesla's still highly probable going to go breaking out by year end. That is kind of the plan, which we're in the midst of. And we talked about this a very long time ago. So from the recent high to low, we already took out the 618786 zone. So price is screaming by year end, we're going to 58, 528, 563. Could get that blow off top, pushing 650 to 700. Last week we talked about all the call options out there. There are 32,000 call options going out to 2026 and expecting Tesla to go up here to 940 bucks. 32,000 call option. Somebody's betting big that Tesla's going to make a run toward that 900 plus. Well, when you buy that absurd out of the money call option, price doesn't have to get to 960, 940 area to make money, obviously, but they're betting big on a way out of the money call option. Does that tell us? That just gives more reason why this push to these targets is extremely high probability. So what have we talked about for a very long time? TSLL. Back in October 24, when TSLL was below $10, we talked about it on that day. I would consider buying TSLL because Tesla's projected to make a run toward 500. Huh. When did we say that? Back in October of 24, right there. Expect Tesla to hit 500, consider the TSLL trade. I know buy, sell, the whole recommendation. I'm not a certified financial planner. I cannot tell you what to do. As a disclaimer, I can tell you what I expect and what I'm doing. So that's what I do. And that's exactly what I did there. Beautiful move. And this is not armchair quarterbacking. This is live action that happened during that call. And price went where? It went all the way from under $10 to $41.50. Then we got the pullback. And else since then, we talked about during that pullback, we'd rinse and repeat when we saw this correction hold that 618 zone. And we started talking about it. When it starts breaking below 15, I become interested to add to my position for this thing to go much higher. And we hadn't even crossed the 618 yet, like Tesla has. This thing's a little underperforming because of the big pullback. But that's what leverage does. It cuts both ways. So ever since then, I've been loading up, and I have a lot of Tesla shares, TSLL right there. And I'm up big already because it went from the zone to into the 20 plus dollar range. And where are we expecting this to go? It's going to at least go 28 to 34 minimum. And when Tesla goes breaking out like we expect, we start closing above that 28, 15, 34 target, then we have a 75% chance we're going to go visit 46 to 50. Well, we've talked about that as you go through this as well. And easy way to do this, because we have all our archive, is Randy, when you're on that sheet, you can do a Control F and you can highlight what you're looking for, and that would be TSLL. And then you can see back in October, that's where we talked about it. Well, we've talked about it several times. TSLL trade is setting up again back in February. Then we talked about the lower it goes, the more we're interested when we reached our target zone for a buy around 15. And the lower it goes, you should add to that position. Again, no buy, sell, to hold. Then in the early days is when it pulled way back, it popped 40% in 3 days. So what do you do in those cases? Take some profits. 40% in 3 days? I like it. Then we said again, if Tesla is going to start targeting 5 to 600, that's the plan. We expect this will start pushing toward that 45 to 60 range. And right here, expect it to rip higher into the fall. What's it been doing into the fall? Going higher, not too shabby. Then most recently, Tesla TSLL, when we saw that $368 breakout, we said Tesla would run towards 450. They had a gap which would run from 368 up towards 450, and that TSLL would make a nice little run as well. And that's exactly what we've seen. This is when Tesla made the break, TSLL made a run, Tesla made a run. That's what 2x leverage does. So when Tesla runs, TSLL runs. Beautiful way to play some leverage without playing options. Fair enough? So where do I think it's going? Minimum 28 to 34. That's just to retest the 618786. But if Tesla starts ripping to that 650, 700 or higher, or that absurd person that's saying Tesla's going to reach by January next year, Tesla's expected to go to 940. If that happens, where this guy going to go? 60s, 80s, could be in 100 itself. If Tesla makes a move toward 900, this TSLL could be up here in the 90s. And we're at 20. So that's why I own these, and I'll take these, take profits, look for new opportunities, and rinse and repeat. What's another one we talked about? Coinbase, based on Bitcoin. How about Bitcoin? Not too shabby. We'll just jump into that real quick. Getting a little bit of a pullback here. That's expected. After that run, I kind of laid this out last week. And I said I was actually looking for Bitcoin to give us a pullback. It did before we broke a new high. But now that we've broken a new high, maybe that's the beginning of our little 1, 2, 3, onward and upwards. So remember the call option we discussed, buy Mara call option? That thing exploded with that move. And I'm still looking for more because the call option doesn't expire into next month, November. So I do expect we get a little bit of a pullback. Mara will pull back. Bitcoin's going to go ripping again. Mara is going to go ripping. So what did I do, Emil? I had several call options. I took a little profits. I'm waiting for this little pullback. Still got some skin in the game, but I'm also looking to add to my position on a pullback and look for Mara to go ripping higher as we go through October, November, and toward the end of the year. But these paid out beautifully based on the expectation of the underlying where it was going. So you don't have to play options on everything. You can, but there are 2x leverage products you can also use, like BitX and BitU. That's Bitcoin. If you don't want to go to a broker and buy Bitcoin, then you just buy BITX. And what a beautiful move that did. Went down here from 50 bucks up to 67. Nice little pop. Well, I don't think this is over. I think it's going to pop even more. And we're looking for targets up here at 79, 85, maybe as high as 100. Amen. And we talked about getting in down here at 30 bucks. That was that pullback we were looking for. And ever since then, we're ready to go blasting off. And from the recent high to low, we took out the 618. We took out the 786. So that is screaming that this BitX, 2x leverage Bitcoin, is going to run towards 80, 75 plus percent chance we go to 80, 70 plus we go to 85. And if Bitcoin continues toward that target of 150 to 170, which we've called for ever since the very beginning, then we might even start pushing towards 100. Amen? And what's the other one? Whether you like that one, there is BitU. I actually didn't want to do that. I want to remove those things, then type in here. BITU is another ProShares Ultra Bitcoin. Made a similar type of move from 50 up to 65, kind of testing the same zone, but it's the same. From the high to the low, we took out the 618, we took out the 786. So this one as well is screaming, we're going where? 75.80. Could we break it and start moving up toward the 90s? Sure. Bitcoin makes that run where we expect it to go to. I would expect at least to see this 75.80. That's what this strategy tells you. Break above, it's a trend continuation. And we broke above from the recent high to low, the 618. That told us way back we had a 75% chance we go into 75. Kind of nice ring to it. 75% chance we're going to run to 75. 70+% chance we're going to run to 80. Those are my still upside target. What happens when Bitcoin makes its run? We're going to be up here. What do you do then? Take profits. All right? Take profits. All right. And last but not least, ETHU, which is Ethereum's leverage product. Ethereum got a nice pullback, starting to go back. We still need to clear the hurdle, but from the same principle, move, and we go to a bigger picture, where's Ethereum going? From the recent high to low, we broke the 618786. We went to this target, right? We reached those and we pull back. What's outstanding on the most recent pullback? Well, all you do is stretch your view, and I'll run this again from that low to that high. This recent high, recent pullback low. We're above the 618 right now. Do we close there? We shall see. But then that tells us we have a very high probability we're going to visit 51, 52. Maybe we pop toward 56. Well, let's go out even to the bigger picture. From the recent last time we did a halving, which is way over here, that was the all-time high into this correction. The prior halving rallied to all-time highs. This is the crypto winter low. Came into this year's halving. We're on our way up. Well, from that high to low, we took out the 618 and the 786. So it is screaming, where's Ethereum going? 5,400, 5,450, 56, basically 6,000. So 5,500, 6,000. Highest of probabilities, Ethereum's going to make a run up there. What if it pops and makes a run towards 7,000 or more? Then our leverage product, we talked about this the last several umpteen times, that from the recent high to low, we would at least make a run toward that 160 to 204, went up to about 190. And Ethereum's not over. I don't think Bitcoin's run is over, and I don't think Ethereum is over, that it should run toward its target. So what happens when it gets there? If it makes that 5,500, 6,000, I would expect this to run toward that 200/250 area. And if we can break that and start pushing toward that 7,000 or higher range, then I think we should probably break the 250 and start looking toward upper 2s/300 range. But what a move. And we pegged that one. So this is what I like to do. I like to use leverage products when I know where the underlying is going. And right now, we have what we need, and we're not even there on this ETHU monthly from the recent high to low. We got some intraday, but on the daily, we did get our close above what we needed. And you see we have some daily candle bodies up here above that 618. So that's still saying we have a very good chance, right, Randy? Based on this recent high to low, you close above the 618 candle body, not a wick, but actual candle body. And if I zoom in on that, you can see there are some candle body closures above that area. Let me bring that back down, but you can see that. There it is. That candle body closed above that all important level, several of them. Candle body, candle body, candle body. And what does that tell us from way back? That ever since this candle body's closed above, we have a 75% chance ETHU is going to make a run toward 285. Kind of fits the mold. Amen? So, needless to say, I'm up huge on this. And the shares I owned, what am I going to do when I get that big pop? Sell them. Just like we did in the early day before we did this little reverse split, which happens on ETFs. That's more common than on stocks. Any stocks that do reverse splits, that's usually a dumpster fire. But on ETFs, you will see this. But what did we do when we got a drop before that? It was into $4 range. It popped to $12. Beautiful. A triple. Took profits, took the house's money to buy it again, and now we're up in profit for what? More upside. So I don't think this is over, and I still think we got next probably month or so as we go into November, maybe into December, we get that run, and we're likely to go at least the 200 to 250. I'm conservative. And if we pop that, then it starts targeting 250 to 285, which brings in that close right there. Likely we're going to go there. Amen? But my targets are here first. I'll take some profits, sell some shares, get up here, sell some more shares, get up there, sell the rest of my shares, and then look for the next opportunity. Harold had asked about MSTR, another way you could potentially play Bitcoin. And as of late, we got Bitcoin runs, MSTR runs, and this thing went parabolic, got a pullback, and now we're in the midst of what appears to be another run. As Bitcoin starts to run again, I think we're bottoming and reversing, and we're going to look for an opportunity for this. But instead of buying shares of stock up in the $300+, there was a way to play that with MSTX, the leverage product like we're showing you. And this is at all-time lows. So what you can do here, maybe buy a few shares, and we started to see a little bit of a rally here. All right, a little bit of a rally. It went from getting a little bit of a pullback. It went from a low down here about $17, went up to 27. Not bad, a little pop. So what do I do in that case? I would look for, if we're going to get the support where we'd like to see it, from the low up to the high, you want to see this little zone hold, which is your magical numbers, 618786. And I'll change that to green because I would really like to see that hold, that zone. So I'll put that green. Then what? Well, you use your 3-point tool. If it comes here and starts bouncing, then use your 3-point tool and you say from this low up to that high to this higher low, what could I be targeting? Well, even if it's just a little ABC bounce, we should get up here at $29.60 to $32 range. If this thing is going to go breaking out, Emil, then we get this pop, we get a pullback, it holds this zone, and if it goes popping like we just showed you Newmont, it went above the 1618 extension, So if this is the beginning of that last run for MSTX, and this is the one, we come down here for the 2, that's the 3 I'd like to get a hold of. Even if it's just ABC, it's a nice move. We can come down to maybe 20 bucks and we pop toward 30. That's still a nice little pop like that. So if A was equal C, we'd get toward 30, nice $10 pop again. But if it turns out it's a 1, 2 going in 3, then we should get above 35 before we get a wave 4 correction, then the wave 5 even higher. Amen? But that's why you get into your position of authority, Randy, and you get these pullbacks. The worst thing that can happen to you is it'll pip you out or stop you out for profit. I like trades when I'm in them, knowing the worst possible thing can happen when you're in a position of authority is it reverses on you and you get stopped out for profit. A lot better than getting stopped out for a loss, right? Those happen, yes. Nobody can avoid that. But that's what I'm watching here. During that pullback, the next run should be a thing of beauty, and that would be similar to that initial leg and push us up at least toward the Magic Fibo. But if this baby runs, it starts breaking above 35, Magic Fibo here and above that 35.1618, then it kind of sets the tone. We're going to get a wave 4 correction, then another 5 as we push into the latter part of the year, October, November, which we're in October, but November, maybe December. Amen? All righty. But there's many ways to do these ETFs and leverage products, and we've used a lot of them over the past and have done very well with them. Again, leverage cuts both ways. When you're wrong, you're wrong. And 2x leverage is going to hurt to the downside. When you're right, and they go ripping, that's kind of the plan. But that's what we've seen. And yes, this is part of this corrective. We had a massive run up to that zone. So this is still corrective action. Is this the end? It came to the Magic Fibo and bounced. Now all I got to see in the short term, Emil, this is ETHU, stretch that out, and you take your recent swing point high to the recent swing point low, and we closed yesterday above the 618. So what is that telling me on the shorter term, even though we see this right now? That closure above the 618 says we have a 75% chance we're going to 200, 70+% we're going to 210. I like it. That's why I haven't unloaded all of my shares. I took some profits, got the pullback, used the house's money, talked about it going up to that 160 to 200 zone. We got to 190. We got another pullback, bouncing off the Magic Fibo. All important magic, that's what we call it, a Magic Fibo line, because it's magically delicious. And we're bouncing. We bounced and we closed above the 618. So any dips on ETHU should be bought and expect price to make a run toward 200, 210. And that fit my bigger picture that I was talking about, that from the prior high to low, we took it out, 285, 310, shorter term, 200, 210. Amen? All righty. So rinse and repeat. Any dip should be bought. If you're willing to trade this, buy some shares. You don't believe it, buy 1 share. And then when it's up there, you'll go, maybe I should have bought 10 shares. And back when it was trading at $4, I bought hundreds of shares, hundreds and hundreds, and it went to 12. Then I bought a lot more before the splitsy here. Bought a bunch more when it was trading extremely low prices. These prices are not reflective up until that splitsy. Now they're a lot more, but that's typically what they do. They did a 1-for-20 split. So for every 100 shares you own, you then own 5. Sounds crazy, but we made a lot of money in that. And even since the split, my hundreds and hundreds and hundreds of shares since the split, now I own 5 times hundreds and hundreds of them. So yeah, I'm still at a profit based on that bounce, and there's more upside. Both call for more upside. 210, 200, 210, continuation, 285, 315. And what do we need for that to happen? Ethereum make the run toward that 55, 6,000, 7,000 range, and this thing will be in the stratosphere. Emil wants to look at XLV. We can do that. XLV. Nice little pop. Kind of tested the Magic Fibo on a weekly. See what the daily looks like. Kind of holding back above the daily, back above the weekly. This looks very bullish. And from the most recent high to low, we haven't broken above the 618 yet. So we start closing. You see a close, a daily close above this prior swing point right there, which is right in the middle of the 618786. What's your target? 164, 168. On the shorter term, we still have some upside pressure where we did close above the 618 from 2.2 from this high down to this low. We closed above the 618 yesterday. So my shorter term target is 153, 156. So if you own shares, you don't have to worry about the timing. If you're doing options, then I'd still give it a little bit of time to play, but that's the plan. Recent high to low, that looks like a beautiful 3-wave correction. And we're starting to grind higher. Closed above the recent high to low, that's 618 right there. That's a body, not a wick. Stating we got a 75% chance we go and visit 153.57. Second target, 156.44. And the good news is, Emil, when that gets up there, then from the recent high to low, we'll have taken out the 618 and the 786 by achieving those targets. So trend continuation up to 164, 168. Amen? All righty. So any dips on XLV should be bought with expectations. We're going to make a run toward 153, 156. And once we get up there, any dips should continue to be bought because then we should make a run toward 164, 168. And for software purposes, let's go over here and put it on a chart. So we do XLV and load it up. And we could see the software is in agreement. Yes, we got a daily starting to get overbought, so we're looking for this to slingshot higher in the coming days, but we might get a little bit of a pullback. The weekly is still grinding, so we expect this in the weeks to come. This is going to continue to push. If you draw the Picasso, paint the PAI software Picasso, this is going to continue higher. We've been engaging and disengaging, engaging and disengaging. Weekly is cycling, so I look for more upside. That looks good. And a monthly you can expect is up also based on that behavior of the weekly. And the monthly is turning up. We got a monthly PAI hook, trend momentum cross. That's looking good for this to continue to push. So is it going to take me days, weeks, or months? I don't have a time frame, but if you own some shares, timing is not that important. If it is options, then I would definitely give it some time because I do expect this to make a run toward the end of the year, certainly. So you might consider options out to January, give it through the rest of the end of the year. Opportunity for this to go higher. Otherwise, own some shares, and this baby should go up several dollars, as we just discussed. But the software is in alignment with our high-low 618 breach. So again, 153, 156. Once we do that, from the bigger high to low, it clears the hurdle, which then, once we're up here, says we then have a 75% chance to go to 164 and a 70 plus to 168. Trend continuation. So any dip should be bought and opportunities are going higher. All righty, let's continue. What about black gold Texas tea, the Beverly Hillbillies? Kind of warned you about black gold breaking down. We still expect it. We came down at a 60 target. We talked about weeks and weeks and weeks, months ago. We finally got the 60 target. I still think any rally should be sold. Even after that move, I still say any rally should be sold, Randy, because I expect we're coming down to 51, 49 area. Been calling for $50. I don't think this is going to decline and get down to low 50s and upper 40s and sit there for days, weeks, and months and just kind of chop down there. I think it's going to be a violent reaction when we get down there. Price is going to go spiking. And the logic behind that is drill, baby, drill. And those manufacturers going after the drilling companies can't survive with prices this low. It's too expensive based on return on investment. So they need prices in the 60s. So what are we talking about here? That I still think price is going to break down and go visit these targets. And anything at 50 bucks, 52 bucks or lower, I'm looking to go long and looking for a big pop and reversal like we did the last time we were in the 50s. Rockets went off in the Middle East, and that baby reversed from the 50s into the 70s very quickly. That's what I'm looking for again, whether it's rockets going off in the Middle East, et cetera, et cetera. But oil refiners out there drilling cannot do it at 50 bucks and lower. It needs to be in the 60s. And I would expect price would reverse and very quickly whipsaw type of move. So I don't think you're going to see prices in the low 50s and lower and stay down there for a long time. It's going to go ripping higher. Got it? So the plan is you can play that as we see this start moving lower, look for opportunities to buy some leverage type products, if you will. Or you can buy shares. Either way. But we're looking for CL to decline further. So set an alert when we start to see oil down in 52 or lower. I'm interested in going long for oil prices to respond and go back into the 60s, if not maybe and pop back into the 70s. Amen. Where did all this come from? Well, a long time ago, back in May of 23, when we got that low, and I started seeing this overlapping, chopping, lower high grind, that price action was screaming, we need a new swing point low. I said it months and months and months and months in advance. We needed a new low. I know you can't see it with all those lines, but that's exactly what we got. We got a new swing point low. So let me just take off all these lines and remove everything in sight just to give you a clean picture. But that's exactly what happened. We got the new swing point low, and since then, we kind of rinse and repeating the behavior. So we talked about it here, all this overlapping, lower high, chop grind. We need a new low. We got it. Notice what happened when we got that low. We kind of popped, consolidated, then made a run to a lower high, big pullback, lower high. Look at since we got the new swing point low. Kind of chopped and grinded, very similar here to that. Then we popped, made a lower high. And what did we do? We popped, made a lower high. Then since then, we got a pullback, another lower high, got a pullback, another lower high, another pullback, lower high. And we kept doing that pullback, lower high until we what? Made a new low. So what's next? A new low. So I know it's kind of all compressed, but if you zoom in and I show it to you a little bit more robustly, we kind of got the low, we got the consolidation, the pop, lower high, lower high, lower low, lower high, lower low. That's the same type of behavior we had over here with that May 23. We got the pop, pull back, lower high, pull back, lower high, pull back, lower high, pull back, new low. So that's why I kept saying for months now, any rally should be sold. And we're looking for price to go to 60. We reached that. And now when we break 60, that's where that other extension comes in. And that is this recent low right there, basically a double bottom, but that low up to that high, we already took the 618 out. We're testing the 786, but when we close below that 60 target, where are we going? 52, 49. So I've been calling for this, make a new swing point low and price to dip down in the low 50s to 50 or lower. And when it does, look for your opportunity for a big bounce. And do I say it's going to the 80s? It has to bounce back into the 60s because they can't afford to drill down at that lows. Got it? So that's a good reason why when price is down here, it's a very high probability target. Oil prices are going to bounce just so those drill baby drillers can make some money on drilling. Fair enough? So any rally should be sold short term. When we're down in the low 50s to 40s, upper 40s, as we come down in here, then I'm looking for an opportunity to go long and look for this baby to go ripping into the 60s. Even if it's in the 40s, it should rip into the 60s. Got it? That's the plan. So, many ways to play it. And I think we talked about that before. If you want to just do certain USO for oil fund, but they're the leverage products. Let's see if I can find it real quick. Anyway, I'll figure it out and I'll let you know. But there's a 2x leverage product you can use to buy that and we'll go higher. All right. So what is it? Any rally should be sold. Look for it to come down in the low 50s, upper 40s. And once we're there, then I'm going to look to go long and look for this thing to bounce back into the 60s. What about gold? Gold, it looks like it's never going to stop, right? But again, even Newmont, the rest of those we've been talking about in that arena. Yes, I think gold's going to 5,000, but this is definitely a vertical breakout. We're already reaching the next extension. So at some point, we're going to get a correction. Believe it or not, Ripley's believe it or not. It's like I called for one here after that big run. We got it, a little bit shy of where I wanted it to go. All that overlapping chopping action, I thought was a potential chance to get lower. Well, even though it hasn't done that yet, I still think this rally is going to give us a correction. And when it does, we can look at buying that Newmont, like we looked at the 1, 2, 3, looking for that 4 correction before the next pop. How much higher can we go? Well, the next up is obviously 4,000, followed by 4,100. All right, maybe we get to 4,000, then we get the pullback. Maybe we go to 4,100, we get the pullback. But I'm definitely a big gold bug. I've been talking about buying gold ever since, go back to a monthly view, ever since gold way back topped out at 1,900. I called for a pullback to 1,000 before it went to 3,000. That was way in advance and spot on. It took years to get there, but here we are. Well, again, you get these massive rips and then you get a big pullback. So mark my words, even gold is going to give us a pullback because it's overdue. And the last one we had, as you can see, and I'll go back to the daily time frame just to focus a little bit more on it, is that when we did this big rip, we needed a nice correction. That was several $100 correction. And now it's continuing. Well, look at that run. That's even bigger than the last run without the pullback. So it's just a matter of time, right, Emil? That nothing continues to go straight up. You will get a pullback. And yes, we're going to 5,000. That is an absolute, my humble opinion, but I do think we need a correction. So any big dip, and when it starts correcting, I'll kind of give you some downside targets. But the idea is at some point from the recent low, and we're still having a new high now, we should look for some sort of 618 type of retracement. Maybe we come back toward 3,500, right? That's what I would expect at least at some point, a little 618 type of retracement before then going onward toward 5,000. But at what point do we stop? If you're buying gold, keep buying it because we're definitely going to 5,000. But if you're short-term trading it, I would be taking profits because I'm looking for a pullback. And how much do we pull back? Well, it kind of lines up right now with my current low of this pop, the base of this big run to the plateau top at the moment would give us right into that 618 type of retracement, 786 zone. And look where that zone's located, where we broke out from. So that is typical for a big run. You get a run, a retrace to where you broke out from, then your trend continuation. So be careful. Yes, at any point, we could get this several $100 decline. And where we currently are in the nosebleed section, where we broke out from, puts us back toward about 3,500, which would give us a nice several $100 retracement like last time. Amen? So sooner than later, but no later than later, I do believe gold will give you a pullback and an opportunity to add to your position for the run to 5,000 and higher. So be careful on that because this will not continue indefinitely without a pullback. Fair enough? All righty. And when it does, we'll be here to guide you in educational, informational, and fun environment to figure out where's our best option to look to buy. But right now, I would look somewhere between that last parabolic run when it starts to correct. Typically, you want to get like a 618, 786 retracement out of that, which ties in with the breakout of the prior all-time high over here, sets the tone for that pullback. Silver, still onward and upwards. Well, we talked about this trade many moons ago when we got the low during that COVID shutdown. I was like, man, you need to buy silver. It is going to go on a big run. It did that. We got a 618 retracement, which set the tone for our targets years ago, 35, 41, and onward and upwards we go. And our target is off the chart up here. You can see I have it set to about $62. I expect that silver's going $60, $70 guaranteed. But the same type of parabolic move needs a correction. And is this the 1, 2, 3? Took out the 618, right, Emil? Looks good to me. So that move up looked like our 1. Correction to the 618 zone is the 2. This rip past the 1618, this looks like the 3. So mighty silver is due for a wave 4 correction, just like we did with Newmont, and we should not come back any lower than 30. Not to say we're going to get to 30, But that's the plan. In a wave 4 correction, we're going to get a correction coming back. It has to stay above that $30 target. So where do we come back to? Do we come back to 41 to bounce? Do we come back to 35 to bounce? Do we come back to 32? All of these are acceptable as long as it stays above that swing point high. We're good to go. And typically in what? Commodities, the wave 5s are sometimes the biggest waves. So where would that put us? It's already in the charts. We're going to 60/70. Most people trade SLV. It's skyrocketing just like the rest of the silver entities. But look at the bigger picture. And why do we feel it's going to 60/70? Because from the recent high to low, we took out the 618 long time ago where we're going to 60/70. We haven't even broken a new high yet. We're getting closer and closer. So maybe that's when this big run stops. We go up and test previous highs, then we get that wave 4 correction to then extend wave 5 into the 60/70 target. In my humble opinion, there are no guarantees, but in my humble opinion, as Justin Wilson would say, I guarantee silver's going to 60, silver's going to 70. But does that mean we're just going to go straight up for the next 20 bucks and get up in there? It's possible, but I'm really looking for a pullback to buy the dip and push into these targets. Amen? We talked about it a long time ago with the pullback, 618 headed to 41 and higher. Well, that target off the page is up here in that 60/70 target. If silver were to catch up with gold, we'd already be in the stratosphere up here in the 150, 160 target. So I do think silver, this is an extremely conservative target. And I do think next target would be 95, 108, followed by a 145, 168. Notice from the high to the low, top out in around 2011, these are the extensions from that move. Check out gold. Whether you look at gold in this form or the GC, doesn't really matter. But from the same 2011 pullback, we already took out the 1618, 272, 2618. We're en route to the 3618. See it? And whether I look at gold itself, same thing. From the high to the low, we took out the 1272, the 1618, 272, 2618. We're en route very close to that 3618. See it? So what if silver, SLV for this example, were to catch up and make a move toward that 3618, 145? So you can see why this is a conservative target, extremely conservative. That's why I can boldly say, in my humble opinion, I guarantee silver is going to reach $60 and $70. What's another reason why silver is going to continue to be in high demand? AI, quantum computers, drones, cell phones, everything has silver in it. So the only way I see silver prices come tumbling down is if we can get that asteroid in the galaxy up there that has a ton of minerals, gold, silver, etc., worth trillions and trillions of dollars, then we'd have a lot of supply to meet that demand and price could come way back. But up and until we get up there in the asteroids and harvest all those items, then supply and demand says limited supply, huge demand, price is going to continue to soar. Amen? Any questions? So any dip should be bought, and I'm warning you, I see a dip coming sooner than later, but no later than later, And even though it's been parabolic, it needs a pullback. And from the recent low up to this vertical move higher, do we get a 618 out of it? Do we come back and retest the breakout? Back to the weekly. Do we come back and test the recent breakout area? Kind of fits in the same boat. I'll go back to the daily and zoom in on that. But you can see from the recent breakout, we have kind of broke out, retested, and then went vertical. So this is typically after the vertical move, you get some sort of 618 type of retracement. If not, come back to retest the breakout zone, which ties in with the 618786 to then continue higher towards 6070. Fair enough? Any questions on that? The other thing I still think has a good opportunity, obviously, is Bitcoin is not over. This was the typical run that we expected, and it's still underway. But Harold, remember when we said target by closing above this, we were going to make a run. And I thought we might even stop shy of the high. And we did that, got a nice little pullback on that candle. And then we broke out. But this is the beginning of what I believe Bitcoin, kind of like silver and some of the others, we're looking for Bitcoin to make its last 5-1 wave higher. And this looks like we're in the midst of that impulsive move up. And this is what I believe is a wave 1. We're going to come down in a wave 2. Then we're going to go ripping in a wave 3. That should put us up into the stratosphere. So let me take some of these lines off and show you a few things. So far, so good. I did talk about buying that Mara call option, which is up huge. And we still got time for that to go. So as we get a pullback and then we get the next pop, this one should be a thing of beauty, Emil. And we did make a new all-time high. And we're starting to pull back. That's fine. So where's a good spot to view? So I'm going to take all this off for a moment. And we can come back and add that. But the most recent move from the bounce off the Magic Fibo up to the high, I would not be surprised to see, and I'll take this little pink box out at the moment and use this one for my 618786. So do we come back a few thousand more and bounce off of that to go higher? Well, what would my next targets be? 3.2 from the low up to the high to this higher low, say a 618 retracement. We're going to start targeting the upper 30s to maybe 144. Getting closer and closer to that 150, 170 target, right, Harold? So what I would like to see that this run hold this green box, then extend at least to 144 to set up, which would be, right, Ian? My 1, 2, 3 would have to go at least to 144 or higher to be the wave 3. Get a correction 4 that holds above this 126 area. For my 4th wave, and the last push toward November, maybe December, would be that last push into the 150, 170 or higher. So if I had to play this out, I believe this is the beginning of the 1 Randy 2 correction. Run up somewhere at 144, 145 to 150 area, be the wave 3. Another correction in 4 that holds above the wave 1 top around that 126. That would be the wave 4. And then the last push into that 150 to 170 or higher. Amen? Then what? crypto winter low, and we'll look like we did way back here in 22 when we got our crypto winter low. And I talked about Bitcoin below 20,000 is a crime because it's a steal of a deal to be buying it at 20,000 and lower. Said that for weeks. And even as it went toward the 130 area, I said Bitcoin below 130,000 is still an unbelievable deal. What did it do? Huh. 126 so far, almost 100,000 over that price, over 100,000 from that price, 20,000 price, and we still got to go to 150, 170. And just a high level overview, this is the fourth halving. We did a halving in 2012, 2016, 2020, 2024. So do the math. Next halving is going to be in 2028. And what do we do in the crypto arena? You buy low, sell high, wait for the next crypto winter once we get topped out. Next crypto winter, we get a pullback. Or we're going to get this big pullback. I still think we're going to get some pullback, but I don't know if it's going to be your traditional 75 to 80%, even though the vast majority of owners of Bitcoin are the independent owners, not the hedge funds and the big dogs yet. So I expect to see a similar type of pullback. So Harold, what does that mean? Zoom in. Every 4 years, you get a 12 to 18 month run. Even way back in here, it looks flatline, but this thing went up thousands of percent during that period, 12 to 18 month run. Got to pull back into the low. Next halving, 12 to 18 month run, pull back into the winter low, run into the next 12 to 18 month post halving. So what are we in right now? Our 12 to 18 month run post halving. That's the target. Then we come into next year, and when we go into 2026, we're going to look for a pullback in the late 26, and wherever we bottoming, I can make a statement now. We may not see it, but if we do, Bitcoin below 50,000 is going to be the steal of a deal like it was below 20. Some people say Bitcoin below 100,000 is the low we're going to see. I don't know about that. I kind of go with the prior years every time we get those big, massive pullbacks. And if Bitcoin gives it to us, then we should see Bitcoin around 50,000. That would be the plan. Set an alert. Any day, week, month, weekend, it doesn't matter. In 2026, late 26, anytime Bitcoin, if it gets to 50,000 or lower, that would be the best time to start loading it up. Like here in 22, we kept talking about it, that it was going to go to 150, 175. We got to 126. That's not too bad, but I still think we got it. Still coming. Then what? Pull back into late 26, having in 2028. We load up here, hold it for 3 years. Then we look to liquidate in late 2029, which is 12 to 18 months post having in 2028. Puts us into 2029. Got it? So if you look back at this, every time we topped out, 18, 22, 26, 25, 26, and then the lows. It's pretty much in 4-year times. 17, 21, 21, 22. So that's what's telling us top out in this year, 25, for us to pull back into 26, for us to then top out again in 29. So just like we bought here at the crypto winter low, and we sell in late coming next few months, then we buy low 26 and sell in late 29. Rinse and repeat, rinse and repeat, rinse and repeat. Fair enough? Any questions on that? So you already know there's ways to play this with leverage ETFs, like ETHU for Ethereum. We already kind of covered briefly, but Harold, I still think we're going up. The target has already been stated from that high to that low. We should go visit 285. Short term, 210, 200, 210 from the recent high to low. We closed above the 618 on that candle body. So we should go up to 200, 210. And on the bigger picture, from the recent high to low, that big candle, we closed above that 618 on that one, which means we're likely going to 285 to 315. So any dip should be bought, and we're looking for that correction to do what? Add to the position or buy some more shares, however you want to do it, and look for this thing to go higher. That's why we're looking for this correction to then last push higher in what we believe is the 1, 2, 3, 4, 5, and we ultimately end up in that 150 to 170 target. Any question? And let's finish up with a couple of others that looks like they're ready to go breaking out. LLY for Lily. Talked about this the other day. Had the high to the low. We closed above that 618 zone. So with that in mind, you see right now we're right at it. So Randy, if this baby closes, we'll keep an eye on that. We close above, then the target's up here at 1,000, 1,100. See it? Recent high, recent low, 618. We're right at it now. If we can get the candle body to close above, then we have a 75% chance we're going to 1,000, 1,060. And what if that happens? We gave you an option to try the LLYX, which is a leverage product. And we're not to the 618 yet, so it's a little underperforming what Lily's doing. But because of the big pullback, it kind of oversaturates that a little bit. So this is why my conservative targets are a little bit under. But I did say the other day when we talked about this, look at that big run in that day. That's a weekly candle, but it's been running since we talked about it. And once we clear 19, it opens the door to 27.29. So watch this. Recent high to low. There's my 618. We start closing above 19. Then it says we're going at 27.29. And Lily is right at it. Also, LLY. Instead of buying stock at $844, we can buy stock with LLYX at a much lower price. And the same result is we bounced off the Magic Fibo. We're testing that 786, so the probability we go up to 1,000, 1,060 is extremely high probability. So that means the likelihood that LLYX, 800 bucks or 16 bucks, what's better? We gave you the option, I think it was like 12 bucks the other day, and it's popping a little bit. So let's look at a daily, see what that looks like. Yep, last week we were down here in that $12, $13 range, and we popped. Now we're above the Magic Fibo, starting to feel the need to go higher. So up and until, if you're real conservative, wait until you close above 19 and then start targeting 27 and 29. Amen? And the other was hymns. Hymns. And it too is testing prior moves, been on an uptrend, but it's testing recently the high to the low, and we're right at that 618. We haven't closed above it yet. But Randy, what happens if price closes above this $60 range right there? We close above 60, then we're going to 75, 75% chance, 70 plus, we go into 79. And once that occurs, instead of buying it at $55, you can potentially try the HIMZ, which is the two leverage HIMs, and you do the same type of math from the high to the low. We haven't broken above, but once we close above 29, the door's ajar to go to 43, 47. So these two have not broken out yet. Lily's right at it. These haven't, but these are what I'm looking for. And man, we get that close above 29, then it's likely we go on to 43, 47. Same thing for the underlying hymns. We start closing above 60, then the target's 75, 79. So keep an eye on that. I think by year end, we've got a very good chance for this thing to make that run. But watch this level. We still need to close above it before we get the green light to run that trade. All right. And last but not least was watch out for your miners right in this zone. Let me come down here. Watch out for the miners. Mara, a little bit of a pullback because Bitcoin's pulling back, but the same recent high to low. We took out the 618, we took out the 786, so we got a 22, 23, 25 target short term. So that call option, I'm already up big. I expect it to continue to pop by November. It was at November 17th. I got in for less than $1. It's still right around that $2 range now. So I expect this thing to keep popping by by November. And I'm looking for the little bit of a pullback for the next push. Amen. But we already have talked about we're going to 22, we're going to 23. That's a high probability. And that 20 call options we bought out of the money when it was down in around 16. We bought the 20 call option. We're not only in the money area, which we were and we're pulling back, but we'll be well into the money as that baby goes squirting. And I do think we're going to be up in the mid 20s by then. When does Mara go ballistic? Historically, we know from the last halving, let's go out to a weekly. The last crypto halving occurred in 2020, and this thing went parabolic during that period, and we haven't done that yet, right? We've made some nice bounces in here, but we haven't made it. We were talking about buying this at $8 and lower, and sure enough, we're almost close to tripling it when we popped into the 20s, and then we pull back again. So where we headed, Emil? I think we're going into the 30s, 50s, could be a lot more. When Mara is a miner, it's going to go parabolic. It's when Bitcoin hits 130 and higher. So the move from 130,000 toward 150, 170, this thing ought to go parabolic. And this thing could go ripping higher. This thing previously went from 20 bucks to 80 bucks in a matter of a couple of months. That's what I'm talking about. Parabolic move. And when is that likely to happen? When Mr. Bitcoin reaches the 130 and pushes from 130 toward 150, that's when those miners ought to go parabolic. And when they do, I'm going to unload. As Bitcoin starts to get into its target zone, I'm going to start selling my hundreds and hundreds and hundreds of shares of ETHU, of all the things that I have, my Mara, hundreds and hundreds of shares, my BTBT, you name it. Amen? So all of these we talked about buying stocks have done very well, and they're not done yet, in my humble opinion. Amen? All righty. So let's circle the wagons and call it a day. The market should continue to grind. And yes, at some point, we're going to need a little bit of a pullback, Harold, but this is what we're looking for. We got a little pop into the zone. Now we're likely going to come back and retest the zone and then bounce out of there. Or did we get the big one? I've been warning about a correction and we kind of got one, but not really deep enough. Is this the beginning? Yeah, it's probably time for us to get a little bit of a pullback, but then we're looking for what? This thing to go higher. And I don't think this is the blow off top. I said over here wasn't the blow off top. I don't think this latest little grind here is the blow off top. And I still think by year end, Santa Claus rally, we're still going to get the push. Next target is 68.38 in the short term, recent low to high. Look for your 618786 zone to come into play. And we'll remove this just to show you what that looks like. And we go from the recent high to the recent low. Let me take all this off for a moment so we can get a clean slate. Recent high to recent low. Here's my 618786 zone. Put that into perspective. So I would look for my first area of big support to be that zone. And what if it turns out that this is just a little dip and then the next rip? Here's my extension toward the upside, 68.40. That would be the plan. And that's correction. Then what do we have other targets? What if this is, Harold, the low, and we do pull back toward this 618 zone? Then this opens the door up here for 69, 69.30. So first target, 68.40. And then we'll see if this holds. Do we get a bigger correction? But I don't think this, in my humble opinion, is the end of the road. And Elizabeth, I'm coming to join you. Honey's coming. I still think we're going to get that continuation of a blow off top as we move into the end of the year. All we need, as we talked about with the seasonality, I didn't show it to you, but it's still looming in here, I believe. I still have, yeah. Seasonality, we get that dip into October, then middle of October toward November, December, we get the big rip. See it? So is this the beginning of a little bit of a pullback into the first week or so of October? Then we go ripping mid-October through the end of the year. That's why I don't think that that is done. And if you're a NASDAQ fan, kind of like the same thing. What happened to my picture? Let me refresh that. Nope. Turn it right side. There we go. It too gives us the same picture. We get a bit of a little chop and drop in the first week or so. Then toward the end of November, end of October, going into November, December, we get the big run. We call that Santa Claus rally. So I don't think this is over. So why is this important? These dips are an opportunity to buy the dip with expectation we're going to make all-time highs again as we move into November, December. Got it? So how much more can we go down? First area of support would be this 6730, 6700 zone. If we start taking out this swing point low, then we can start targeting a little bit lower, 6500. But watch that closely. No matter how much we dip, we come down here, blow off top, or we even come further down, still looking for that blow off top by year end. So we get some opportunities. NASDAQ, same thing, getting a little bit of a pullback. It's bullish to the next target, 25.4 up here. And then we could start targeting 25.6, then up there at 27, 2600 right there next. So I do think we're going to end up in the stratosphere before we're done. We do need a pullback. I've been calling for that for several weeks now. And we got some minor pullbacks, but yet it's still rinse and repeat. And I know what you're looking at. You're going, oh my God, I can't see anything in all of that. There's nothing but Fibonacci line. That's what we break it down to, even a 15-minute time frame. And this is typical that we're due for a bit of a pullback. We had a nice run. So a pullback would be likely. Look at a 15-minute. We already broke below the 15-minute Magic Fibo. 30-minute. We broke below the 30-minute. That's part of the pullback. 1 hour. We're testing the 1 hour. I mean, this thing could stop here and bounce off of that. If we start closing below the 1 hour Magic Fibo, then you go to the 4 hour Magic Fibo, which is down here a bit further. So could we see a few 100-point correction during that period? Well, it's the same. This recent low, watch where that 618786 is going to come in. From that low to the recent high, my 618786 zone, and this baby is sloping upwards. So is it possible this correction could continue a little bit deeper and we start moving toward 24,750 or 24,680 or 24,750 to 600 zone and my Magic Fibo? Maybe we pull into here next week, or this week and the next week, and then we go Santa Claus rally. But we're definitely going to go higher. This is not my humble opinion, the end of the road. The blow off top still some to come, but we do need a little bit of a pullback, then extension. What did this thing do most recently? It went right to those extensions, recent high to recent low. We went to those extensions. So we're going to rinse and repeat that. So Randy, what does that mean? That means during this pullback, we'll look for where it finally stops. And again, we'll look at the Magic Fibos as potential areas to go to. But once it does, then what? We'll have a new high. Right, we got a high. We'll have some sort of new low. Is this the end and we're ready to go breaking out? Well, if that's the end, we start closing above this 25,160, and we start targeting 25,3, 25,349. What if this pullback goes further and we come down here to that 24,750 area? Then when we start closing above 25,000, we'll target 25,350, 25,4, and 25,6. Got it? So any dip should be bought. The question is, where's the dip going to end? Well, that's where the software will come in. You go toward NASDAQ, for example, and we got the NASDAQ right here, and we have, I don't know how that got moved over there, but let me slide my toolbar, if I can grab it, over there, and we look for 1 hour, pushing lower, 4 hours, topping and reversing. That's part of the correction. So when I get a PAI hook, trend momentum cross on a 4 hour, what does that mean? The 1 hour is going to cycle down. And we're not quite finished. So I'm looking for this to push a little bit lower. Do we hold the Magic Fibo and bounce off of that? Or as my daily is starting, I'm watching this closely, Emil. Do we get the PAIs beginning to hook? The trend momentum is flat. So do we get a PAI hook, trend momentum cross, like we did there and there, or here and here? And what happened when a daily does that? You get the 4 hour to cycle down. It's a thing of beauty. So when the daily hooks and cross, the 4 hour cycles down. When the daily hooks and crosses, the 4 hour cycles down. Are we going to get that where we have another day or so of downside pressure, so the 4 hour does? Then what? We buy the dip. Buy the dip. Right? Buy the dip. So the software is a very important component. And I'm watching this closely. What can happen? The 4 hour could slingshot higher as my 1 hour finishes the cycle, then cycles back up. 4 hour slingshots, just like last time, when we break on to all-time new highs. If not, we start breaking this low, which is the previous low, then the door is ajar to come down to that 4 hour Magic Fibo. Whether you're looking at a charting platform or with the software, could we possibly come down at 24.7, 24.5 area? Yeah. We start taking this swing point low out, then the door is ajar to come toward that Fibonacci retracement area. Amen? All righty. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Remember the oil prices. Any rally should be sold because we're expecting more downside. But once it gets into the low 50s to upper 40s, that's when I'm going to look to go long because I expect that bounce. So take care. God bless you. We love and appreciate you. I'm humbled and honored to be your mentor and instructor. And join us again tomorrow. That's it. And that's all.